There are growing concerns that San Francisco-based First Republic Bank may fail or is not doing very well after shares plunged more than 60% on Monday as the fallout continues from the collapse of Silicon Valley Bank and Signature Bank. Shares at First Republic fell despite efforts from the bank's leadership to reassure customers of that bank's strength. First Republic announced on Sunday that they had received additional liquidity from the Fed and from JPMorgan Chase. To discuss more on the SVB collapse and what this means, we welcome back Mitch Roschelle, Managing Director for Madison Ventures Plus, and he is here with a financial deep dive. Good morning. Good to have you back on back-to-back days. How you doing? Are you tired?
You think? I'm in Denver, Colorado.
I understand. I got to do this every day, so I know. But
listen, Mitch, anything for you. Don't worry about it.
Anything for the Mitch and Mitch show. I appreciate that. We talked yesterday about SVB, and you were directly impacted by the SVB failure. First Republic's in sort of the same area. You know, one was Silicon Valley Bank. First Republic's based in San Francisco. They're right next to each other. Let me ask you this. Is this related at all? Are these similar? Are they going through some of the same problems with tech investors and such? What's going on here?
Yeah, so they have very, very similar clients in terms of who they lend to, who they invest in, and whose deposits are held there. So it's not a surprise. I also have a First Republic account personally. The SVB account that I had was almost an accident. We were using a bank in Boston Private Bank that was acquired by Silicon Valley Bank back in July of 2021. So we were there sort of by accident. The good news is we got most of the money out yesterday. There's one last wire transfer that's coming out. Interesting little catch, though, when we were working with the bank to get the wire transfers out, the woman from the bank says in an email, you know, we're backstopped by the government, so there's no safer place to keep your money in this bank. And we were like, yeah, no, thank you. Please wire transfer the money out.
This was from First Republic, though, right?
No, that was from Silicon Valley.
That was from SVB. It's really tough to keep all the banks that are letting you down at the same time straight. I'm sorry. We found out in the middle of the interview yesterday that you were, in a sense, a victim of this bank run for Silicon Valley Bank. Yeah. And now we found out today that you actually have an account at First Republic. So, like, how you feeling? Because you are representative of how the American people are feeling about the banking system, which is not great.
Yeah, you know, listen, not to share with America all my personal junk, but my primary checking account is with First Republic. Their office in Manhattan used to be right near my office in Manhattan. But all of those deposits are under the $250,000 limit. So I'm not too worried about that. I'm waiting for my kids who have their accounts there to wake up and say, Dad, is our money okay? But you know what? I'm glad that's the case, because this is a Main Street issue. And I think a lot of the press focuses on the Wall Street impact of it. I mean, you led the segment talking about the stock market futures, but this is truly a Main Street issue. And had the Fed, the FDIC, and the Treasury Department not stepped in over the weekend, this would have been hellacious Monday yesterday, because we would have lost confidence in the banking system, and every bank would have had a run on it. I don't care if it's Bank of America, JPMorgan, what have you, because people would have felt, wow, what if I can't get my money when I need it?
I know we have not seen financial panic like this in quite some time as it relates to bank runs, but the New York Times did report that starting in 2008, 465 banks failed over the course of a 4-year period. The president came out yesterday, I should say, and said that's not going to happen this time around. Do you believe that?
I don't. Yesterday we talked about canary in a coal mine. I'm going to use another metaphor. I'm going to say tip of the iceberg. I do think this is a little bit of a tip of the iceberg. And here's why. The Dodd-Frank legislation that came out of the global financial crisis of 2008, 2009 really focused on those systemically important banks that were, quote, too big to fail. Okay. And what we're seeing is, the 18th largest bank, which is, considerably smaller, still big. We're talking about billions of dollars, hundreds of billions of dollars, but considerably smaller than the systemically important ones. We found out over the weekend that they're systemically important. And the other thing we found out is that the risk management function in that bank, Silicon Valley Bank I'm referring to, wasn't as robust as it should have been.
Thanks for watching. Go to newsnationnow.com to find NewsNation in your cable lineup. And don't forget to click the red subscribe button below to get more of NewsNation's fact-based, unbiased coverage.